Good day, boys and girls. Today we are going to look at more transactions that needs to be recorded in the general journal. The first one would be the writing of bad debts. It sometimes happens that the business cannot collect a debtor's debt. The possible reasons for this are that the debtor is insolvent, which means he does not have enough money or assets to pay all his debts. His financial affairs are taken over by an attorney who then decides how he will pay his debt. Or the debtor cannot be traced. He has disappeared. It makes no sense to keep such debtors on the books of the business, and their debt must be removed from the accounting records. When this happens, the debt is written off as irrecoverable. The amount that was owed is now a loss to the business and is called bad debt. Bad debt is an expense to the business and will decrease owner's equity. In essence, the asset debtors are now converted to a loss bad debt. This transaction is recorded in the general journal and is entered as follows. The debtor's account and debtor's control must be credited since the debt is being removed. Remember, debtors is an asset and have a debit balance. To remove it, we need to credit it. The bad debts account must be debited as to account for the loss. Let's look at an example. On the 1st of October 2018, a debtor, C. Carlser, was declared insolvent and his account of 150 must be written off as irrecoverable. The entry in the general journal. Now, what do we need to remember about the general journal? It in essence consists out of three basic entries. First, we write the account that we debit, then we write the account that we credit, and then we write down a narration, which is an explanation of the transaction. So what is the account that we are going to debit in this case? Bad debt, because that is our expense, our loss. What account are we going to credit? The debtors account, which in this case is C. Carlser, as well as debtors control. It's an account written off as irrecoverable. Heading to the debtors ledger. That will be now C. Carlser's account in the debtors ledger. Whatever we did in the general journal, we should also do in the ledgers. Now remember, C. Carlser owed us 150 Rand, so he will have a balance, an account rendered for 150. In the journal entry, we have credited C. Carlser's account, so we will also do that in the creditors ledger. And since debtors have a debit balance and we credit it, it is subtracted, and that leaves C. Carlser's account now with a zero balance. Posting to the general ledger, again, we do exactly as we did in the journal entry, which means debtors control is going to be credited with journal credits, and bad debt is going to be debited with C. Carlser or debtors control. The effect on the accounting equation of this transaction, our assets decrease because our debtors control decrease. Our owner's equity will decrease because bad debt is an expense. Please note, it happens sometimes when a debtor is insolvent that all his assets are sold and then part of his debts can be paid. In other words, the business does not lose the whole amount, but only that part that still cannot be paid. So let's look at an example. On the 1st of October 2018, C. Carlser, a debtor who owes FEM traders 150, was declared insolvent. His estate can pay 30 cents in the rand, issued receipt number 10 for the amount and wrote off the rest as irrecoverable. So after 150, we will receive 30 cents for every 1 rand that he owes us, and the rest need to be written off as irrecoverable. To calculate, 30 cents in the rand means that for every 1 rand that the debtor owes, he can only pay 30 cents. That means we need to take his debt 150 and multiply it by 30 cents to determine how much he can pay, which in this case will be 45 rand. The rest, the difference between the outstanding debt and the amount that he can pay, which in this case is 105 rand, must be written off as irrecoverable. So in essence, this is two entries. We receive 45 rand, which will be recorded in the CRJ, and we write off 105 rand, which will be recorded in the general journal. Please note the amount that was received is recorded as a receipt in the cash receipt journal, and the rest is written off in the general journal. The effect of the accounting equation would be that our asset decrease with the total outstanding amount. Our bank increased with 45 rand, so our asset increased with 45 rand. And owner's equity will decrease with 105 rand since bad debt is an expense. Bad debt recovered. Now this in essence is not a general journal entry, but it goes with bad debt, so it's spelled with here. It sometimes happens that the debt of a debtor that has been written off as irrecoverable is later collected. Now what happened when we write it off as irrecoverable? The debt has been cancelled and is thus not part of debtor's control and the debtor's ledger anymore. The business therefore receives money that has already been written off as a loss from a debtor who has been removed from the business books. One entry is certain, and that is that bank is debited since the money has been received. What is the contra entry? What is the reason for receiving money? It is clear that the debtor's control cannot be credited since the debtor has already been removed from the books of the business. We therefore create a new account, bad debt recovered, that will be credited since it is an income for the business. This transaction is therefore a cash transaction and must be entered in the cash receipt journal and not in the general journal. Let's look at an example. On the 1st of October, FEM Traders received 100 rand from a debtor E. Area, whose account has previously been written off as irrecoverable. Issue a receipt number 40. Now the entry is made in the CRJ. We receive money, but the reason for receiving money will not be debtor's control, but bad debt recovered. When we post to the ledger, whenever we receive money, bank is debited, and the reason in this case bad debt recovered will be credited. The effect on the accounting equation, our asset increased because our cash increased. Bad debt recovered is an income, and therefore owner's equity will increase.